The following is a presentation of TFNN. Now, TFNN opens the door to the future. Larry Pesavento, systems analyst, is your tour guide into the market futures. Want to see into the future? Well, climb aboard Larry's time machine and come with us. Larry takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044. This is the Futures Hour. Here's your host, Larry Pesavento.
Okay, good afternoon, folks. As you probably are aware, we are having a huge clearance sale again in the commodity markets. We've had silver and gold both make new lows. Gold's back to being up a little bit on the day. Silver's still down about 15 cents. But the real news is the collapse in the commodity markets for grains and soybeans. All three of those markets, wheat, beans, and corn, are all down substantially. We'll have our friend Rich Anderson from Anderson Capital Management on at the half hour to talk to us a little bit about this. But it's really starting. It's already been going down hard, but today is another really bad day to the downside. So as far as the stock market goes, we had the rally that came off, I believe, of the new moon. It lasted one day because we took out that low. And after a big up move like that and a big down move like that, it's spelling one large word out there, folks, volatility, volatility. The VIX index has reversed, as Basil pointed out previously. We are looking at some increased volatility that we've been looking for quite some time, and it looks like it's getting ready to start to accelerate. We've already taken out the lows of mid-August in the Dow Jones Transportation, and some of the other indices are acting, very, very weak, but we've already been expecting that, including the Russell 2000 as being one. And then, of course, the New York Stock Exchange Index. During the rally yesterday, the New York Stock Exchange Index could only rally to the couldn't even rally to the 38% level, where we're making 61% in the NASDAQ and 50% in the S&P. We could only make we could only rally back 25%. That's how weak the actual market was during that time. I could post that in here if I could. Give me a second here. We'll take a look at it. And then I want to get to the, give me a second here, folks. I want to get to the dollar index, because that's where all the money is right now. And we're going to take a look at this dollar index. We've got the New York Stock Exchange in there. You can see the divergence that we've had here. We're almost at the 786 retracement here in the New York Stock Exchange Index of the August lows. And if we go below the August lows, you're going to see some real acceleration in selling, in my opinion, because this market hasn't corrected in a while. And once people say that this might be a potential correction, then we'll have to just wait and see. But it had every chance to really rocket on up and make new highs as of last night's close. I don't know what it was that turned the market this morning. It couldn't go up last night overnight, and then it started down. I don't know what the news was, if there was any news, but it's really looking bad from a technical perspective. Now, the chart that I posted into Tiger TV today comes from our good friend Andy out of Germany. He posted the chart on the weekly dollar index, and as you can see, this is a very, very important chart. Let me put this back up here so we can put it in again, just to make sure everybody gets to take a look at it, because it is, I believe, as an important chart as we had with the New York Stock Exchange Index and the divergence that we had last week that we talked about. But the dollar index is completing right now, time and price together up here at this 85.50 level. The price level we were looking at was at 85.38. It's trading at 85.37 right now, so all those have completed. That basically says that there should be very strong support in the euro around the 127 level. The low last night was 126.99, and so far it's held that level. Hasn't done much yet, but it's still held it from a very, very small amount anyway of a bounce here. So we're having a really collapse in the commodity markets, folks. It just really looks very, very bad from a deflationary basis. If you look at the price, fact is, let me just get up here and I will, since I'm talking about it, I guess I should post it. And we'll take a look at this here. We'll take a look at the soybean market here first, because you can see here over the past, what's happened today anyway, we've had another, big drop down of about 17 cents in beans, and we've broken through most of the support. We're basically at a 1.618 for, some type of bounce. But when you look at this on a daily basis, there's really no support in beans till about 8.50. And if you remember, about $3 ago, when Rich Anderson was on, we were talking about that Fibonacci relationship in beans that happened at the 1242 level where we had the Gartley, and that was a very, very good sell signal to the downside, and the market has had a tremendous move. Just give me 1 second here. You'll be able to see it here. We'll see it here when we get this thing in here pretty soon. And we really don't have any support here in these beans for quite some time. It's just been an absolute debacle here. If this ever happens to the stock market, some of these 401ks are going to be in the minus section. So we have a really big move down in these grains, wheat, beans, and corn. I don't see any support here. And with the crops coming in, we've got big crops coming in. They don't seem to be any crop failures, unless we get a freeze or something like that, and it would have to be a really hard freeze in order to make it work. So that's primarily what we're watching here. We're almost up into the sell zone for our Treasury bonds that we've been looking at. We've got just a little bit more to go here. If you'll give me a second, I will put this up, and we've been talking about that for quite some time. And I know we're getting very, very near it, but we got another half a point, about another point to go, and we'll be right into the area where we want to be looking to sell the Treasury bonds. Give me 1 second here, and I'll get up the price that I wanted, or the chart I wanted to show you, and we will be very, very close to that level here. Okay, I think this is right. This is what is today? Today's the 25th. Okay. I can't even see the high. Okay. All right. Anyway, we've got a little bit higher to go in the Treasury bonds. Let me draw this in, and you'll be able to see we're very, very close to this three-drive pattern that we've been watching. Just a little bit more to go, and we should be okay. We needed to get up a little above the 138 level, and then we will have a pretty good chance here in the Treasury bonds. We'll be able to get a good short off, I think, in the next few days. Whether this means anything with the stock market or not, I'm not actually sure. I don't really know. All I know is, I've been saying this for a bit, we're going to see volatility like we haven't seen in a very, very long time. Many of you that are new traders over the last 3 or 4 years, you're going to see things you haven't seen in your lifetime if you're new to this. So just get ready for it. Be sure that you use stops and protect yourself at all times. I want to take a few seconds here, well, a couple minutes as a matter of fact, to talk a little bit just about trading and mental preparedness and things like that. But the reason why most people lose when they start trading, and they're twofold. One is, well, the main thing is they don't know what they're doing. They think if they're a doctor or a dentist or a lawyer, they think they can do trading very easily. Well, there's totally different skill set in being a trader as opposed to being a doctor, an attorney, or dentist. In those three professions, you have to be very, very smart. In trading, you don't have to be very smart. All you have to do is be able to walk and chew gum and learn how to exercise risk control. And that's the hardest thing in all of trading, is to learn how to do the risk control. Because once you do that, the rest of it is easy, because we don't know which trades are going to win ever. We don't know how much we're going to make on any trade we ever put on until it's over. So the only thing you can control in the risk-reward equation is the amount of risk. And this is where the trading becomes difficult. Mark Douglas says this is the simplest way, it's the hardest way to make an easy living that you'll ever find. And that's true because of the mental part that you have to work with. And the technical part, the patterns, the Gartleys, butterflies, three dries, whatever you want to call them. That's the easy part. If you want to use a, system of moving averages and stochastics and MACD and it works for you, that's fine. As long as you're disciplined enough to follow what you're supposed to do, you shouldn't have any problem. But the discipline is the hardest part. This technical part is very easy. The next part is the money management part, and that's a very intricate part of trading, and many people don't quite understand it. It's basically about risk control on the percent of money that you have at risk and things like that. And the other one that you want to be able to look at is the mental part of trading, and that's what you have to work on every day. That's a daily operation. There's not a day goes by that you can't prepare yourself mentally for what you really have to do. Because trading is not about watching the monitors or anything like that. Trading occurs after you've done the work that you need to do and you put the order in. After you put that order in, that's when the trading actually starts, because you don't want to be watching the monitor when your trade is going. The reason why is because if you're long, you focus on the upticks. If you're short, you focus on the downticks. It's just a natural phenomenon because our bodies are programmed to prevent pain. And if you're short and the market's going up, that is called pain, P-A-I-N. And if it goes and you're long and the market goes down, that's pain also. So you want to focus on how much you have at risk, and then after you put the trade on, practice not watching the monitor. I know it's a difficult thing to do, but if you're watching the monitor all day long, practice only watching it for 10 minutes and then take a break for 20 minutes. That's what you really want to do. Now, you can put your limit minders in so that if a price gets hit, you can literally go in and, move your stop, take your profit, get out of the trade, make sure the trade's cleared. But you don't want to be watching it because, frankly, boys and girls, the market doesn't really give a darn whether you're watching them or not. I found that out a long, long time ago. No one really cares what anybody's doing in the market except you. And so you've got to realize that the biggest detriment to trading is that monitor that you're looking at, because it's not your friend. It is your mortal enemy, because it forces you to do the things that you don't want to do. Because if you're long something, it's going down, you're thinking about the pressure involved. It's, oh my God, it's goodbye house, goodbye boat, goodbye car, goodbye wife, and then goodbye account. So that's why you want to stop watching the monitor, put your stops in, and try to work. It's not easy to do. It takes time. Like I've always said, it takes at least 45 minutes to an hour to be a professional trader. Some people can do it in a lot less time, but most people take 2 or 3 years, and that's pretty much what it takes, because it's about the equivalent of a good college education from a major university. Okay, we got the Dow down a couple hundred points, and we've got the bonds rallying a little bit and gold down a little bit. We'll be right back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, back to the Futures Hour.
Oh, boy. Okay, folks, we're back, and we've gone below our big ABCD pattern in the gold that we were looking at. If you'll give me a second here, I will put it in and we'll take a look at it here. We're very, very close. We made lower lows today in gold. We've also made lower lows in silver by just a little bit. Silver bounced back above the 1746. We're trading at 1750 in silver right now. That's the long-term 786. And if we go much below that, we'll be looking at $14.80. In silver, and somewhere in the gold market around the somewhere between 1190 and 1170. And if we get below 1170 in the gold, folks, you're talking 850 gold. If you remember those grain markets, when they were coming down, they would stop at 618s for 4 or 5 days and rally and then give up. That's a cycle failure, and when that happens, they're going to go to the next level, just like God made little green apples. So you've got to be very, very careful here, in the gold. And believe me, I really wanted to be a buyer of gold and silver, and I've tried it. They worked for a while, and had a really good rally, and then it gave up. And if we take a look at the XAU that we always watch, you'll see that we are still down near the old low that we made just about last May. The market's actually trying to hold up at that level. right now, but the $64 question is it going to be able to do it? And it's still too early to tell. We're below the 786 by quite a bit. That came in at 88. You remember we were warning you about this when it was 98, and now it's at 84. That's a 20% move in that stock in just a matter of about 3.5 weeks. So once it breaks these key Fibonacci support or resistance levels, it really wants to tell you that it wants to go, down to the next level. So keep that in mind. The fact that there is a possibility that this could be a double bottom, but it's still too early to sell. We would need a move in the gold above $1,250 an ounce, and we'll need a move above silver above $18 an ounce in order to confirm that there's a possibility of the bottom, in place. That's the way it looks from a technical basis. It's interesting, though, that we did match the exact low of that XAU from where we were around Memorial Day, around May 27th. We were at the 83 level, and we hit 83.20 today, so we're in that same zone. And whether it's going to be a bottom or not, it's still, quite early to tell. But there's a possibility if we break below this level in gold, below that 1190 level, that we'll be looking at somewhere, way below $900. That's what it looks like from the long term. And remember, this market topped a couple years ago back at $1,932 an ounce, and we could easily cut that in half, and you'd be trading at around 900. So just have to be extremely careful. That's a good part about pattern recognition, is that if these numbers don't hold, then they're going to go to the next level. That's the key, to what we're looking at. We got the Dow weakening up now. This is one of our worst days in the Dow in a long time. We're down 250 points, and the last time we had a move like this was around 200 points. So if you multiply 1.618 into 200, we could easily be down 320 to 350 in the Dow today, without any trouble at all. So there's a lot of selling starting to come in, and it should, bring itself into the commodity markets too, which it's already doing. We're seeing, big collapses in corn, wheat, beans, just about everything. Copper, everything is getting hit. And if it gets any worse, it starts to cascade. Remember, markets go down faster than they go up. And the first person that answers the question why gets a big surprise. Oh, we've already got a winner. The reason why is that fear is a greater emotion than greed. And that's why prices go down faster than they go up. When Hollywood does movies, they do them on fear and fright and things like that. They very seldom do movies about greed, because fear is something that you can measure. You can see the dilated pupils, the sweating or diaphoresis. You can hear the increased breathing and heart rates. You can see the white knuckle effect, the chalkiness around your mouth when that fear sets in. And the reason why I remember that is they still have my picture there at the Chicago Mercantile Exchange on one day. I was really fearful. And as you walk into the exchange, you'll see my picture there showing a person in a state of extreme fear. Hope you'll recognize it when you see it. But anyway, the gold and silver certainly look like they are at the moment of truth, but it doesn't look like it's going to be around much. Got the Dow down 260 and silver down about 20 cents.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com. Now, back to the Futures Hour.
Okay, we're back, folks, and I believe we have our friend Rich Anderson on of Anderson Capital Management. Are you there, Rich?
You bet. Hi, Larry. How are you?
Well, Rich, will this debacle in the grains ever stop?
Well, let's start with. I actually wrote down 5 notes. I normally don't, but I think that not just in the grains, but across the board, the idea of CalPERS, the California Pension Fund, getting on hedge funds. I think there's been a general liquidation. We'll see if that's true or not in the numbers on Friday. Commitment of trader numbers, but that'll be as of Tuesday. But I think there's generally some of that going on. 2, harvest, it's perfect weather. Harvest is going. It's a bumper crop. And then to exacerbate the situation, we don't have the pipeline from the Bakken fields in North Dakota. The president has been against that. Mm-hmm. As a consequence, his friend Warren Buffett, Burlington Northern is the railroad he bought, is making gangbuster money. But we just don't have the rail cars to move this grain. The difference in the basis for cash corn out in our farm in South Dakota, it's bidding around $245 right now, which is a whole bunch under the board. Beef corn right now is at $326, so, $326 minus $245, that's a big basis.
Has it ever been that much, Rich?
No. No. And this is all because of this rail. I mean, some of these rail cars, some of these cars are costing 10 times what they cost a year ago because there's so much demand for the cars for oil. And if we had a pipeline, of course, we wouldn't have that problem, but then Warren wouldn't be making quite as much money. There's a couple other interesting things. October 10th is the crop report, and that'll be the number that the people will be focusing on. Likely as not, we'll make our bottom, will be as bad as it's going to get for a while around that, just after that report, probably just before. We had record volume in the soybean open interest, on the soybean option trading on Monday. There are over 212,000 contracts traded of options. The $9 strike price in beans is the biggest open interest, over 37,000. And, my theory on options is they always go to the strike price that'll frustrate the most people.
I think you're right.
If you know what I'm saying.
Absolutely, yes.
So those are some of the things I'm thinking about. And then the last thing I'm thinking about is the index funds. Starting around the beginning of the first week of October, we'll be talking about how they're going to be adjusting, because the stuff that's gone down they'll be buying more of the 1st of January, and stuff that's gone up they'll be selling out of, which, there isn't all that much. It's mostly all gone down this year, but they'll be rebalancing their funds the 1st of January, and they'll start to talk about the number of contracts that they'll be doing in January in the next week or so.
Rich, have you seen much margin call liquidation in the grains over the last 5 or 6 days? Because we've really started to accelerate rapidly once we went below that $3.50 a bushel in Christmas corn or Dees corn. It really started to accelerate, and also when we went below $10 in beans. I know that magical 4-digit number in beans had held for so long, and now we're back to normal. Well, not normal, because normal's back around $5 or $6 a bushel, but was there much increase in selling from margin calls, or do you know?
Well, not that I know about, but then I don't know anybody that's long. Everybody I know has been short for, since June. Mm-hmm. Beans is, well, I told you $9 November is where I think they're headed minimum. I think there's another $1 on the downside in them, and the acreage shift, come February, when we're setting the price for crop insurance for corn, if corn's down here, Larry, there's going to be such an acreage shift from corn to beans, because it costs a lot less money to plant an acre of beans than it does an acre of corn because of the fertilizer, et cetera. And there'll be a huge acreage shift, in my opinion, and there'll be an acreage shift into wheat, and that'll put a bottom in corn. But, then that means new crop November beans up 15. Shoot, we could be seeing $7 next fall. Of course, in between the next fall and now, we've got a crop to be grown in Brazil, and and it could always be a weather problem. July, end of January, beginning of February is kind of like our July-August in the U.S. as far as the soybean crop goes. So that'll be a time to be watching the weather in South America.
Okay. If you had to put a finger on a trade that you like the best between now and, say, the 15th of October, what would you be looking at, Rich? I'm going to be buying October cattle, selling December cattle, but that's a game played in the delivery month, and your average brokerage firm won't allow the normal clients to do that. Oh yeah,
that's
the spreading,
I'm going to be doing, but for the average person can't do that. I'd probably be selling some out of the money calls in beans and buying a put, a strike or two lower, and figuring that the call pays for the put and make some money that way. Yeah, it gives me some upside.
Okay, one other question someone's asked us, and that is, how long does it take for these lower commodity prices to filter through to the consumers? I mean, we've been coming down for quite a bit. I know we haven't seen lower prices in cereal or bread or anything related to that, but how long does it usually take?
Let me give you a good example, well, two examples. First of all, the president of the Minnesota Corn Growers was in the Star and Tribune this weekend talking about food for fuel causing high prices of food, back when corn was $8.50, and now corn is $3.25, yet the food hasn't gone down. The best example I can give you is Minneapolis spring wheat a couple of years ago got to $25 a bushel. And Panera raised the price of their bagel from 75 cents to 89 cents. And now Minneapolis spring wheat is $5.38, 20% of what it was then, roughly. and yet that darn bagels cost you probably $1.19 today.
Yeah, that's for sure.
It doesn't pass through. Now, where it does pass through is in oil prices. Because we have this glut of oil, gasoline prices have gone down, and that's like a giant tax cut to the consumer. So you'll see more spending. I'm a technical trader, but just generically, gasoline prices going down is like a tax cut for everybody, and the people will have a little more money to spend at the grocery store or at Walmart for Christmas season because of the lower gas prices.
Mm-hmm. Well, that's one good thing. We get a tax cut through the oil prices, whereas we're certainly not getting one in the other way.
To our president, it's just a lucky deal that they're drilling.
I understand. Well, Rich, I want to thank you for showing up today, and we'll have you on in early October after the crop report. Maybe we'll have you around 13th of October, and we can go over what's going to happen. Of course, it'll be past tense by then, but maybe then we'll have maybe a tradable bottom in corn, wheat, or beans that we could see some type of a rally. But it certainly looks like they're going lower from here, doesn't it?
Yeah, it's that. But that's what bothers me a little bit is the when everybody gets on one side of the market, they'll throw a surprise in. But option expiration's tomorrow, and we didn't seem to get much of a gamma surprise this month. So I think we're just going to be overwhelmed by the amount of grain. I know they'll be piling millions of bushels of corn on the ground in South Dakota until they can get rail cars to move it.
Wow. Truly amazing.
It's pretty. There was some land sold in Iowa, or tried to be sold, farmland in Iowa yesterday. And a year ago, that land would have gone for $12,000 to $15,000, and yesterday the only bid they could get was $7,600.
Wow, down 40%.
Yeah. Well, look at the price of corn, versus where it was.
That's correct. Yeah.
It's ugly out there.
Yeah. I remember when you used to get $300 or $400 an acre for that land. Remember?
Yeah, and believe me, I bought some then. But the problem is with this kind of a crop, and unless you have a weather problem someplace in the world, these prices could stay here for a good long time. For the last 4 years, these farmers have been able to plant knowing that they've got a built-in profit because of the crop insurance. The average price in February of this coming year is not going to give them that built-in profit, and that's why you'll see that acreage shift from corn to beans and from corn to wheat. But it may take, unless there's a huge weather problem someplace in the world, it will take years to work out of this.
I can believe that because we've seen it before, haven't we?
Yeah.
Rich, one other question I have for you. Lake Cachuma, where we used to live up there in San Luis Obispo, on the way up there, right north of Santa Barbara. That lake is about 75% empty. What are the chances of that thing filling up? Because the last time we joked about this was 1988, and as we were driving over the pass to take you back to the airport, you said that puppy will be filled up next year, and the next year we had the most rain we ever had in California. Do we have anything like that coming?
Not that I can see on the horizon. In fact, John Davis is a meteorologist that used to be our meteorologist at Smith Barney, and then he went to work for Chesapeake because energy's where it's at for the weather guys. But in any case, he's talking about we just flat out have too much population on both coasts to be serviced by the water that we have available. I mean, there's just too many people using the water, and we're not getting any more of it,
Well, Lake Tahoe is, down so much. I mean, it's really amazing when you see that. The water line around Lake Mead is just unbelievable.
Yeah, I know. I just left Vegas a week ago. By the way, in October, maybe I'll drive into the studio because I'll be down in Naples. Maybe I'll pop up to Tampa.
Oh, that would be great. They would love to know. It's in Clearwater.
Oh, well, same difference.
Same difference. Yeah, it's very, very close. Yeah, they'd love to see you. Yeah, that would be great.
I've never done that. Maybe that's what I'll do.
They'll probably even give you a hat.
Oh, good.
Yeah, there you go. Hey, Rich, thanks for showing up, buddy, and tell Lisa I said hello, would you?
You bet. Take care.
All right, pal. Yeah,
Bye.
Thanks for calling. That was Rich Anderson of Anderson Capital Management. He's our man in the fields for the grains, and he's been telling us since $12.50 a bushel that beans were going down, and down they've come. So we'll wait and see, the next leg of this when it finally happens. But with the crop report coming out on October 10th, we want to, keep our powder dry. We've tried a few times here in corn and beans over the last few days, last couple of weeks anyway, when we had some really strong support. We had a little bit of rally off key numbers, but the market would only rally a little bit and then get back to break even and start making new lows. So the amount of risking that we were taking at that point was, just a few $100s of being a farmer. And, we don't have to stay in the field when you're a trader. A trader, you get to buy it, and when you want to get out, you get to go home. A farmer, he doesn't get to go home because he has a capital expenditure. He's got banking, ties that he has to do. He's got people that he employs, and so it's a big difference. So we have to keep that in mind, what trading does for you. It gives you that flexibility that you don't really have to worry about these types of things. I still think that the key thing that we're looking at as we come to our show today is that U.S. dollar index at that 85.50 level. 85.38 was the number. We're trading at 85.36 right now, up about 20 on the day. And if this is going to turn, it's going to happen very, very shortly, because as you can see from the chart that we put in there, there's some very strong Fibonacci time sequences of 1 and 1.27. And these are weekly charts, folks. And if you look at that chart, it has got incredible harmony of the price swings that have occurred. There are 4 of them there that are just absolutely spot on, and you have to really respect those because, these are harmonic things that we follow and believe in as part of what we're watching, and it's a very, very important thing, in my opinion, to really see that happening. Now, I wanted to mention one other of the Forex trades that we watch quite a bit, and that is the Japanese yen versus the U.S. dollar. We are very, very close to a 3-drive pattern. You can see that on the chart that I posted in there. You got drive 1, drive 2, and drive 3, and that comes in very close to where we are right now. And that means that we could be, coming into a multi-year, high in this particular one, because this is a chart that goes back, well over a year and a half, and we're coming into some really strong resistance up in this area of 109 to 112 in the, the Japanese yen versus the U.S. dollar. There's one other cross rate that is very, very close to a very, very important spot, and that is the Canadian dollar. We are within a heartbeat of completing a major 786 retracement. Within this 786 retracement, you're going to see several patterns unfolding. You have a 3-drive to a top pattern that started in the mid-August. You also have a 786 retracement off of the early yearly highs up at the 786 at 111.35. The high today was 111.27, so we're within about 8 or 10 pips of that particular move. We have 2 ABCD patterns happening there. And this is happening at the same time that we're looking at this dollar index at this 85.80 level, and that's why it is very, very important to watch this, because these commodities, they keep going down and dollar keeps going up. People are able to buy our commodities at a cheaper price because they're converting their weak currency into a strong currency. Okay, we're going to take a little break here. We got the Dow down 240, and gold is up a bit, and silver's down a shade.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Up next, the Diagnostics Trading Hour with Daryl Martin here on TFNN. Now, back to the Futures Hour.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.